So we have CPI tonight on gold, a very interesting, very exciting time for traders. But in this video, I just want to break down some manipulation levels gold can spike into during CPI in order to grab liquidity and move, in its intended direction. And I want to start off on the daily time frame. I'm going to bring it back over here. I just want to go over previous CPI and what happened and how we're able to look at potential opportunities in the market after CPI initially drops. We're going to start here on the daily, right? We're going to get rid of the CPI daily candle, which is this one. And we're going to look at the previous daily. So I'm going to mark out the lows and I'm going to mark out the highs. These are going to be our manipulation levels and levels we can target eventually once we manipulate one of these levels during CPI. I feel like I've said CPI about 7 times already during this video. I'll try not to say it again. But basically, I've now gone down onto the 12-hour time frame. I need to get the next 12-hour candle. So within a daily candle, there's 2 12-hour candles. These 12-hour candles are very, very powerful. You want to make sure you take these down and take notice of them each and every day. Each and every 12 hours. So what I want to do here is mark out 12-hour lows and also 12-hour highs. Okay, previous 12-hour lows and 12-hour highs. This is the 12-hour candle prior to CPI dropping, news dropping. Okay, and if we go down now onto the 15-minute time frame, this is the time frame I like to look for entries from. We're going to look at price coming into these levels leading up to inflation here. Okay, and if I just skip over a little bit, we can see that we actually manipulate these levels early. So inflation hasn't even happened yet. It happens at 11:30, right? Or 12:30. My apologies. And we're manipulating these areas already. See, we've spiked them. And you can see once that happens, we actually start to consolidate a little. And leading into CPI, when we get the initial move, where is it? It happens right here. Okay, right there. So there we get the spike out. Okay, so we've had the manipulation. This is the manipulation of these levels. And this is why I always say it's very important to not trade until 15 to 30 minutes after CPI. You don't want to be trading before it. You don't want to be trading during it. You want to be trading 15 to 30 minutes after it. And here is why. Look at the very next candle. It comes straight back up and closes back above these manipulation levels. This is now the intended move. This is the manipulation. This is the intended move. What happens next is where you could get your entries, a little strategy that we call in my community, break and tap. So what happens is this candle breaks back above. This is your break of the key level. The next candle then opens up and comes down straight away, tapping into that level. Right, we haven't broke the highs yet. We haven't broke the highs by more than 3 to 5 pips is what I usually say is the sweet spot. If you haven't broke it, if you broke it by a couple pips, that's fine. Anything more than 5 pips, you probably don't want to be entering this trade. But we create a button wick first, tap into this key level, and then we start breaking the highs. If I just fast forward a little bit here, once we start breaking the highs, beautiful, right? Let's say we enter a trade here now because we have a break and tap of this key level. We have the manipulation. We now have the intended move right here with a break above a tap and a break of previous highs. Let's say we enter this trade right here. Let's say we target the manipulation here to the upside or maybe the highs over here. Right? We want to make sure we keep an eye on this area because, again, this is also another manipulation area where price could spike into, come back down. But let's play this out and see how it plays out. Beautiful push there off your initial entry. We get a little bit of a pullback, almost down back into our entry level, and then price continues to spike up eventually. I remember this because I remember watching this in real time with my team. And if we have a look to the left hand side, I put this take profit right on this resistance area here to the left hand side. Okay, you can see price resistance in here. Once it broke above, it retested right here and continued. Then once it came back below and retested once, sold off, retested twice and sold off. So this level is a level we definitely need to pay attention to, right? We want to make sure we could even potentially take profit here or start managing the trade. Again, what happens? Price spikes up into that level and hits take profit right. So that is a perfect example, a beautiful example of using daily 12-hour levels as your manipulation levels during CPI in order for gold to grab liquidity and move in its intended direction. Again, I'm just going to say I don't trade CPI personally. I highly recommend everybody else not to trade during CPI. It can get very choppy and you can tend to lose a lot of your trades during this time, especially leading up to it. Afterwards is not so bad, but trying to trade London session or, kind of like pre-New York before CPI is actually dropped is not a good idea. I hope you guys enjoyed that video. If you want more information, you want to trade live with me every day, there's a link down below. Come and check us out. If you have any questions on this approach, on this model, on CPI in general, Let me know down in the comments, and I'll see you in the next video.